This is the AgriTalk video supplement for the week of Monday, December 21st. I'm going to cover three markets here. April ethanol, March corn, and January, soon to be March soybeans. Let's jump into ethanol. This is really kind of an update from a couple of months ago. This market is still, let me change this pointer here to vertical. This structure is still intact. It is a ceiling really into spring trade. From here, this market can fall back. I'll give you the sell signal on that in a moment, but at this point in time, it's steady as she goes. There's no bullish continuation. There's no sign of upward follow through into spring, summer of next year until or unless this structure is violated, even on a weekly basis. So 1.512 for the month of December. There's another couple of weeks left in that, at the most. It's kind of chopped up into the holiday trade, of course, so a little less than 2 weeks left. If we can settle above 1.512 on a weekly basis or at the end of December, then we have a long-term buy signal that should play out. This was the April low, and so that would be 9 months. I think it would take 9 months perhaps, so we're talking later summer into autumn trade for 2.248 to be realized, or at least this formation. And by that point, we're talking September, October, it's going to be more like 2.0. So closing above 1.512 at the end of December, or above 1.505 at the end of January. Even a weekly settlement above this area I think would be good. Bullish continuation then spring, summer of next year, summer, autumn, we could actually reach into the 2.2s, and I think should. Downside, let's take a look at the downside support. We have a band of support. It really begins at 1.350, but we broke that a bit. 1.278 for the entire month of January. This is a monthly chart, and this formation is at 1.228 for December. It rises to 1.278 for January. That is a floor of support that can contain selling through January, possibly into later winter. We could trade inside this wedge for a number of months, 2-3 more months perhaps. Once again, closing above 1.512 at the end of December, or 505 at the end of January, would indicate bullish continuation. Closing below 1.278 at the end of January, any week in January, is bearish continuation. I'll just throw this out there as a possible target. That is the high of the low, 1.043, that if we close below 1.278, I think you've got several months bearish continuation to the high of the low of 1.043, where this market can bottom out into spring, summer of next year. But right now, I'm going to categorize ethanol as two-sided, congested between 1.278 all of January and the very low 1.5s, 1.512, 1.505. We could trade inside this area into later winter, and we have a directional indicator with a settlement outside this wide range. Let's move on to corn. This is kind of a repeat. I've had a buy signal in place since September, early September, when we settled back above this long-term channel bottom, then indicating 465.25 over the following months. At the time in early September, I was saying spring, summer of 2021. We are likely to reach that sooner, actually, and in fact, it is a range of targeted resistance that begins at 457.25. It's 8 cents wide. It is an area that, if tested over the coming weeks, and we just might, that can absorb buying into spring, summer of next year. From 465.25, this market can fall back into the 360s or 370s once again within a matter of 3 to 5 months. But closing above 465.25 at the end of any week, and certainly at the end of any month, this market exhibits a significant buy signal that I would expect to play out into spring, summer of next year, 652 even being an objective. And there's a lot going on here. I'm going to rough ball this right now. You've got something of a double channel top somewhere in here. I'm just visualizing this. I haven't calculated it out, but I think we could say kind of a range that begins, we'll just say 620 into the 650s. That'll play out into next summer. And that would be our objective if we were to close any week above 465 and a quarter. Until then, this is hedge setting territory that you could hold into next summer, because from here we could fall back into the 360s. I'm going to show you something else here with corn. This is a weekly continuation chart. This is our support at 404 and a quarter that, if tested over the next 3 to 5 weeks, and I'm not anticipating it, can absorb selling into March contract expiration, and above which that 465 and a quarter level, which I can draw right about there, that remains our target into later winter. 404 and a quarter, our floor of support nearer term, able to contain selling through winter, and above which, once again, 465 and a quarter is likely, I'm going to say, by the end of February. And one more shot here for March corn. This is the daily chart. This number is changing every day, but you can see now how realistic, after having pushed through this consolidative area, which is in the upper 420s, we did that late last week. We can now continue upward into the 460s. 463 and a quarter is rising daily. And in fact, it merges with 465 and a quarter later this week. So by the time we reach this, this formation could be well into the 470s. But I'm just noting it that visually, you can see that that actually looks quite possible that between now and the end of January, this 463 and a quarter formation, or more notably, the 465 and a quarter formation, is in reach over the coming weeks. And finally, this is just one snapshot of the bean market. I've been saying this now for a month and a half, since we had the buy signal in early November above this formation that is presently at 1138 and three quarter. This reflects the January contract presently, but March contract volume levels are closing in on January, and I suspect later this week we will be talking March as lead contract, which will inherit these levels. Excuse me. So bottom line, 1138 and three quarter, our floor into next summer, above which 1290 even is expected by the end of February or sooner. 1375 and a quarter remains a 3 to 5 month target above 1138 and three quarter. On the way up, 1290 even can contain monthly buying pressures. We may see this level over the next 2 to 3 weeks. 1290 even by that point in time, able to contain buying into possibly through February trade. We could fall back here. That's a 50% retracement point from the 2012 high against the more recent 2019 low. I say 2020 here, that's not accurate. That's the 2019 low. Anyway, if we close above 1290 even anytime between now and the end of January, it's certainly possible. 1375 and a quarter, which is our 3 to 5 month objective, then likely realized in as little as 3 to 5 weeks, where the broader soybean market can tap out into next summer. Now downside, if this market were to close the week Thursday below 1138 and three quarter, that is a long-term buy signal failure. In essence, a valid sign of weakness into spring, summer of next year. We could fall all the way back into the 930s, but as I've been telling my subscribers, I am paying some respect for this 1083 and a half ascending speed line, where we could bottom out on a monthly basis. So there could be significant hesitation here at 1083.5. We could consolidate for a period of time before we get the sell signal follow through below 1083.5. So how do I phrase this? A bullish above 1138 and three quarter into next summer. A bearish below 1083.5 into next spring, summer. And in fact, I think if you are a long-term player, you could set hedges if we settled the week below 1138 and three quarter, anticipating the 930s into summer trade. Just know that this 1083.5 level will test your patience on the way down. But that's the downside scenario. Almost irrelevant at this point in time. This market has been bullish since the buy signal I talked about in early November, above 1138 and three quarter, anticipating 1375 and a quarter as a spring-summer high. That is all I have for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.